In the 2008 financial crisis, America caught the flu, but Europe went on the ventilator. It looks like it is happening again as our banking crisis is now spreading to Europe. In fact, European banks could be in worse shape than U.S. banks, which is a problem since European banks are a much bigger part of their economy and are the lifeline for most European companies. So far, the euro pain has been out of the headlines since the first wave of this bank crisis was directly from rate hikes, and the European Central Bank did not hike as hard or as fast as the Fed. But the next waves are likely to be even bigger than here in the US. First, the news. Sweden's biggest landlord, the unlikely named Sam's Hall's Byggnads Bolaget, apologies to my Swedish listeners, is crashing after a cut to junk by S&P. That was followed by a suspension of their dividend and a 90% plunge in their stock price. This is a problem, both because 60% of Swedes rent, landlord companies are a big deal, but it's a much bigger deal because Sam's Hall were seen as a canary in Europe's coal mine, raising questions about commercial real estate across Europe, and now that canary is going down. I've got a couple videos talking about crashing commercial real estate here in the US, but keep in mind the bank collapses we've seen in America so far have just been from that first wave from melting treasuries. So more waves are coming, not just from commercial real estate, but from consumer credit, home mortgages, small business loans, and of course, the trillions that banks gamble in jittery financial markets. Now, broadly speaking, European banks have all of those same exposures, and European banks fall harder because total assets in the EU banking system are about 28.5 trillion compared to roughly 23 trillion in the US. Of course, the U.S. economy is much bigger. We're about 50% bigger than Europe because socialism and now suicidal green policies. So European banks are roughly twice as big in terms of their economy than here in the U.S., and they absolutely dominate lending. Given that scale, every problem American banks have is likely worse in Europe: the commercial real estate, consumer loans, industrials, and small business loans. Even sovereign bonds could be worse in Europe, given that much of it is managed by clowns who already almost killed their banks a decade ago. Now, next month, we're going to see a big credit crunch for European banks as 500 billion in pandemic-era central bank handouts, in theory, have to be paid back. This could be impossible for many banks, forcing them to sell impaired assets that could, as in the US, expose the holes in their balance sheet. For example, in Italy, the paybacks actually exceed the extra liquidity of the entire banking sector. With inflation currently running 7% in Europe, the ECB may balk at printing yet more bailout trillions, which would force European banks to slash lending, something we are already seeing here in the US. Now, given that EU growth is already forecast at 0.3% for this year, that's roughly population growth, this would almost certainly throw Europe into a recession, and that could potentially be a deep recession, going by new German industrial numbers showing an 11% collapse in orders on the month, which is the worst since the height of the COVID lockdowns. And so, as Europe joins America, Japan, and even China in downturns and potential financial collapse, it is looking like the next year could be a very rough one across the world. All right, we'll be watching. See you next time.